Hey guys, welcome back to another video. Today I'm going to be covering imbalances, and I'm going to be briefly going over a trade that I took today, which was based around the imbalance. Okay, now as we can see here, this is a market profile chart. I've gone over it in previous videos, so you might be familiar with it. If you are not, it's just a different type of chart that just shows price at different time periods. Okay, and I know that sounds a little vague, but that's essentially what it is. Okay, so each number that you see here, if we zoom in and look closely, you guys can see numbers. Now each of these numbers represents 30 minutes. Okay, so the TPO number 1 is the first 30 minutes, so from 9:30 to 10. The second TPO is from 10 to 10:30. The third from 10:30 to 11, etc. Okay, so it's just 30-minute periods, and it shows where price was within those 30 minutes. So at 9:30 to 10, price was all the way up here, all the way down here. Okay, so it was within this range. Now in the second time period, it was from here to about here. Okay, so just as you can see, this is just showing where price was at any given point in time, but it just distributes the data in these kind of bell curves, right? That's essentially what this is showing. But anyways, an imbalance in the market happens pretty much everywhere. Okay, there can be buying imbalance, a selling imbalance. Imbalance is just basically when price moves away too fast. Okay, and that leaves behind kind of like a hole, like a little hole in the market that the market hates. Okay, the market hates those little holes and it wants to fill them. Okay, the market doesn't like it when there is holes. It's not very sustainable. A hole is it's very unsustainable for the market, like I said. So what happens is a lot of times the market comes back and it fills up the hole. Now, as you can see here in this example, an imbalance is very clear to see. It's just going to look like a single print, like a tail, right? Like a single print line. Okay, as you can see, there's only one period here. That means price got very aggressive. So whoever was here buying pushed price very, very fast. Okay, and there wasn't enough time for the market to build any support behind itself. So logically, the next day, when we opened up here and we trade back into it, okay, we expect to see some rotation because the market, like I said, doesn't like these holes. So we'll try to fill the hole, right? So the market pretty much traded inside here like this, range, and then eventually at the end of the day, we rallied higher. Okay, but the market doesn't like this. So it's very likely that once the market starts to trade above it, again, you see that they're going to try to get inside it. You're going to see a move most of the time toward the bottom, and then you're going to see some balance, and then, whatever, up or down after that. Okay? But anytime you see some of these imbalances, that's where you have to be paying close attention. Now, today we have the same situation. There was an imbalance from the 10th of August here. As you guys can see, it's not as big, but it's still an imbalance. Okay? Now, these buyers, they pushed price up all the way through all of this value. Okay, and the gray areas are the values. Pushed price all the way above all this value. Okay, and we guess where we kind of stopped. Kind of stopped on the second period. We stopped right below in the imbalance. So now once we saw that there were an imbalance, we expect a move to the upside. And then guess what? We expect some balancing, meaning some range. Okay, now if we look at a regular chart, okay, this is the same level, imbalance is here. So this, I'm going to mark it up just so you guys see. This is the imbalance that we were looking at before. Okay, so as you can see from what I said before, we traded all the way from down here all the way up into the imbalance. Once we got inside it, okay, this is where we kind of started testing it. We tested it here. They were trying to really push it hard. You can see them fighting. Okay, you could see them fighting. Look at the size of some candles in here. Very aggressive. Okay, very aggressive action in here. Okay, they were fighting. Now, we went up. We tested the bottom, right? And like I said, you know that they're most likely to fill the imbalance once we are inside. So, logically, what can you do? You would look for longs, okay? Long positions at the bottom of the imbalance, expecting a move to the top. Okay, very simple, really nothing too complicated. Now, I didn't catch this one, okay? But I did catch the little pullback on this one right here. Okay, I saw a little opportunity to get in. I jumped in, and my target was right here at 47. Okay, for 22 points on that. Now, if you look at any imbalance, like I said, you will expect to see some rotation. Okay, unless you see a lot of volume at the top, okay, to continue the move. Okay, if there is no high volume up here, this imbalance is not going to continue. I mean, this breakout isn't going to continue. Pretty much just like a range or like a balanced market. The same idea applies. However, it's not as strong. Okay, because an imbalance is not really like an area where there's, you know, players on each extreme, you know, sellers up here, buyers down here, you know, keeping the market in a range. Okay, that's not the same thing. Okay, but the idea that buy below, sell above here, that idea applies. Okay, but the dynamic is a little different. Okay, here there is no people holding a market down, right? This is just kind of like a little pit stop. The market's going. You expect to see some rotation, right? So up down a little bit. Here in this case, we just kind of rotated once or twice, and then, you know, price broke out. Okay, but in general, you expect to see some reaction inside this imbalance. Okay, very simple, guys. Now, if you just wanted to trade purely imbalances, that's also very feasible, right? You can make a strategy that could work. I mean, I don't do it all the time because I have other setups, but if you really wanted to, you could look at an imbalance like this. Okay, you have a range of about 47 points. Okay, and once you trade into it, like I said, you were expecting a move higher. So what do? You just kind of, you know, put your buy order maybe here, and then, you know, depending on your risk profile, you know, put your stop somewhere here. I would never take this trade because in my trading that's way too much risk, right? Because I trade very small risk. But someone that has a slightly different strategy, that, you know, maybe it's not as bad to trade 13 points, right? Or whatever, you know, find a place to put your stop. You know, this is where your strategy development comes in. But, you know, once you have a point to put your stop, you have a very clean trade to the upside. Okay, now you do not want to go and start trading. Okay, we go long and then look, we go back short, and we want to just kind of keep it kind of biased, right? So if we came in long initially, right, and overall the day is pretty much bullish, no reason for you to be switching over and trying to short it. Okay, generally stick with one side. Okay, and you want to go with the side that you see is the most dominant. Okay, you want to have the momentum on your side. You don't want to be, maybe it works. Sometimes it does work. Like here, you would have made a little bit if you got out with a trail, but if you just kind of waited for it to go down to the bottom, you would have just gotten out, possibly break even. Okay, so just don't try to trade everything. That's always not a good idea. Focus on one side and take that side. That's pretty much all you have to worry about. But yeah, let's look at one more example of imbalance in the markets, and you can see these everywhere. You can also see them as they happen, right? This is after the fact. This is after the day's already formed, but sometimes imbalances form within the day. Okay, these imbalances form, like for example today, right now we have a little imbalance right here. Okay, if price were to come down, okay, and start testing these areas, we could see it would be very likely for price to just sweep down. Okay, probably break through this low and then maybe come back and balance out. Okay, but let's look at another one. Now another thing to note, that another piece of information that the imbalances give you, is that for example in here, there was a very clean imbalance. However, price never came back to test it. Okay, as you can see, price never came back to test it. So what is that telling you? That's telling you in this move, there is extremely aggressive buyers. So like the next day or the day after we don't come back, extremely aggressive buying. And guess what happened? You got a huge move higher after this. Right, so if you ever see an imbalance that doesn't get filled, you know that the trend in the direction of that imbalance is very aggressive. Okay? That's another little piece of information you guys can use. But situations like this, okay, like I told you guys, if you see an imbalance, likely to get filled. Okay, we did try, okay, but we failed. Okay, and then in this situation, it's just a very situational scenario, right? Because we did imbalance higher, we tried, failed to go inside it. We kind of went higher, but there was no interest by the buyers up here. No interest at all. You guys see how price is just kind of lagging up at these highs. If price really wanted to go higher, there would be no opportunity for sellers just to keep the market here. They would have, buyers would have just bought it, right? If somebody offers you a Ferrari for, $10,000, you're gonna probably want to buy it, right? So this is exactly the same situation. Okay, if somebody's offering the Nasdaq at 99.57, right? And price is gonna go higher, it could be a bargain, right? But clearly here nobody thought so. So then price just kind of balanced, very ugly up here. And then guess what? The next day we gap down and we go back to fix everything that we had prior. Okay, now it doesn't have to be so exact most of the time, but you will see, like, this is a situation where you would have been profitable if you did follow the simple rules that I gave you, which are, once market is trading, right, we traded down, there's a downtrend, right? As soon as you break into it, maybe sell, put your stop somewhere, and then just ride it down to the bottom of the imbalance. Okay, very simple. Okay, now obviously you don't just go ahead and do that. I suggest you do some strategy development around this, but it is very possible. I use this to trade myself, obviously with different strategies and rules, but the concept is pretty much the same. But yeah, I hope you guys learned something in this video. If you guys want to look at the trade that I took, it was for $1,800. I took one loss for $550 prior, but that was pretty much it. It wasn't anything crazy, but it was a nice trade overall. And this is obviously the futures chat room. If you haven't checked it out, I post. I'm starting to post these pre-market levels where I share with you guys the value areas, point of control, high day, whatever, all that stuff for the S&P 500 and the Nasdaq futures. So if you guys want to check those out before trading and mark them on your chart, they will help you out a little bit. But yeah, that's pretty much it for the video. I hope you guys learned something, and don't forget to like, comment, and subscribe if you haven't. And I'll see you guys on the next video. Thanks for watching.